Ladies and gentlemen, good day and welcome to the eMudhra Limited FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikas Luhach from Churchgate Partners. Thank you, and over to you, Mr. Vikas.
Good afternoon, everyone. I am Vikas Luhach from Churchgate Partners, and I welcome you all to the first earnings call of eMudhra Limited, post company's listing on the stock exchanges on 1st June 2022. Before we begin, I would like to remind all the participants that some of the statements made on today's call may be forward-looking. For more details, please refer to page number 43 of investor presentation. Joining us today from the management side, we have Mr. Venkataman Srinivasan, Executive Chairman, Mr. Saji Louis, Chief Financial Officer, and Mr. Kaushik Srinivasan, Senior Vice President, Product Development. I would now like to hand over the call to Executive Chairman for his opening remarks. Thank you, and over to you, sir.
Safe and healthy. The company recently got listed on BSE and NSE on 1st June 2022, and I would like to thank all our employees, customers, and shareholders who have shown confidence in our business model and supported us in our journey so far. Given this, our first earnings call, I would start with the overview of our business model and underlying strengths. Then I would pass on the call to Kaushik Srinivasan, Senior Vice President, Product Development, to talk about our business segments and product portfolio, followed by Mr. Saji Louis, CFO, who will discuss the financial performance in more detail. We have already circulated our investor presentation, which is available on our website as well as on the stock exchange's website. I hope you all have had the opportunity to go through the presentation, and we will be happy to take any question afterwards. Coming to the company's overview, we at eMudhra are engaged in the business of providing digital trust services and enterprise solutions to individuals and organizations. If I look back at our inception, our journey started in 2008 with a mission to accelerate the transition to a secure, integrated digital society whose foundation is built on digital identity and trust. Over the next decade, we have extensively focused on the R&D, introduced enterprise solutions with the core objective of empowering our customers and offering great experiences, save significant cost, and at the same time improve security, compliance, governance, support clients in their digital journey. Fast forward to the present, eMudhra enables enterprises and consumers to transact securely through a combination of trust services, cyber security, and digital transformation solutions. Today, we are a one-stop shop solution provider in secure digital transformation journey and are assisting clients not just in India but internationally as well. In our digital trust services segment, we have around 191,000 retail customers, 95,000 plus channel partners. In the enterprise solutions, we have 270 plus partners in India and 280 plus partners in 21 countries. During the year, we had a net addition of 196 clients with total clientele of 714 customers and a well-diversified mix of BFSI, government, and private sector. Our client retention ratio is more than 90%, and top 10 customer contributes only around 30%. I am pleased to report that the company has delivered growth across all key performance indicators in FY22. Our revenue from operations grew by 39% to 183 crores. The revenue growth was led by enterprise solution segment, which registered revenues of 98 crores, a robust growth of 52%, and supported by digital trust segment, which registered revenues of 85 crores, a growth of 26%. Our net profit was 41 crores, growth of 62%, with improvement in margins to 22% from 19% in FY 2021. Company continues to generate strong cash flows of rupees 39 crore, around 96% of net profit, which reflects underlying fundamental strength of our business model. In the light of strong performance during the year, the Board of Directors has recommended a final dividend of rupees 1.25 per share, which is 21% of the EPS and is subject to shareholders' approval. During the year, we have many successful project wins to our credit, some of which I would like to highlight. For our eMudhra offering, we are delivering an end-to-end data encryption project for a defense force which will have secure key management capabilities. A leading utilities company based out of Saudi Arabia is implementing eMudhra to deliver paperless transformation using e-signatures. Kindly note that in the MEA region, the banking version of eMudhra is accepted by many banks as a platform of choice for banking paperless transformation. In Europe, we have implemented MCA for a leading payments and payment security provider, which allows issuance of digital signature certificates to IoT devices. We have also launched the Empower portal to resell SSL TLS certificate. This is aimed at providing our partners a centralized dashboard for procuring managing certificates for their customers. In the domestic market, we have acquired several customers across BFSI for e-sign services. Now, if I take a moment to look at last 5 years, the company has delivered a strong revenue CAGR growth of 22% with accelerated profitability and delivered a PAT CAGR growth of 33%. Our 5-year average return on equity is around 26%. We look forward to maintaining this growth momentum backed by our competitive advantage, established presence in key markets, and a diverse product portfolio in the area of digital security and paperless transformation. The near-term strategic focus areas are: 1. To gain market share. We are the industry leader in Indian trust services market and would strive to maintain and gain our leadership with our value proposition of one-stop shop player, which in the long run will help us capitalize on emerging opportunities in data privacy, data protection, and digital transformation that is happening in India. We will continue to tap into the large opportunity present before us and further expand our presence in the international market. As part of our strategic expansion plan, we will be setting up additional data centers in India and at various overseas locations, which will augment our technological infrastructure and support our plans of expanding into the overseas markets to drive growth. New age industries such as electric vehicle space and smart cities present a viable and good growth opportunity due to their enhanced dependence on cyber security framework, and companies continuously investing in developing, innovate, and provide better products for such segments. Overall, we believe that the demand for cyber security and digital transformation solutions will see a healthy growth momentum. The renewed focus on sustainable and environmental friendly practices by both public and private organizations will give thrust to presence-less and paperless way of doing business. Also, the unfortunate health pandemic COVID-19 has only accelerated the inevitable adoption of the paperless process. I am confident of the ability and strength of the eMudhra business model, and I can assure you that the management team remains fully committed to expand the business and maintain its industry leadership position in a fast-growing industry. Now I will hand over the call to Mr. Kaushik Srinivasan, Senior Vice President, Product Development, to talk about our business segments and product portfolio. Thank you.
Yeah, thank you. eMudhra today operates through two business verticals: digital trust services and enterprise solutions. I will first talk about digital trust services. We are the largest licensed certifying authority in India with a market share of 37.9% in the digital signature certificate segment. Since inception, we have issued over 50 million digital signature certificates. The company issues range of certificates both in India and internationally through our Web Trust accreditation. Our digital signature certificates provide digital identities and ensure authenticity of transactions through cryptographic validation, and are primarily used by individuals, large enterprises, and small and medium enterprises across all industries. And through our certifying authority operations, we issue three kinds of certificates. First, individual organizational certificates such as signature certificate, encryption certificate, code signing certificate, document signer certificate. These allow individuals and organizations to authenticate or sign documents as part of e-commerce or online transactions. Second, SSL or TLS certificates, such as domain validation, organizational validation, and extended validation certificates, which protect websites through varying levels of assurances to the end user on the security of the website. And third, device certificates, which secures devices and communication in IoT ecosystems and ensures authenticity and confidentiality of data exchange. In terms of our presence, we have a pan-India presence with more than 191,000 direct retail customers and around 90,000 channel partners. We also provide technology platforms that cater to both partners and direct retail customers, and our clientele in this vertical comprises of all kinds of subscribers who use digital signature certificates, such as for income tax return filing, Ministry of Corporate Affairs filings, tenders, foreign trade, banking, railways, and many other needs. Now, if you look at the domestic industry for this segment, its size is estimated to the tune of approximately 1,200 crore at the end of FY21, and it's expected to grow with a CAGR of 16% over the next 5 years due to increasing adoption of digitalization and support from government policies, and eMudhra is well positioned to capitalize on the growing market opportunity. Moving to our second business vertical, enterprise solutions. Under enterprise solutions vertical, we offer a diverse portfolio of digital security and paperless transformation solutions. Our offerings provide identity, authentication, and authorization solutions, thereby enabling enterprises to secure and manage identities of their consumers, employees, partners, as well as IoT devices. Through this business vertical, we offer three kinds of products. First, eMSigner, which offers e-signature workflow solutions or paperless workflow through the use of digital signatures. This is an effective solution to the paper problem faced by many organizations, and at the same time ensures better customer experience and managing risk governance. Second, eMAS, through which we offer authentication solutions to enterprises to securely handle online identity and access management. The key features of this product include multi-factor authentication engine, single sign-on, integration with LDAP and Active Directory, advanced reporting, and many others. These first two offerings are used primarily by e-government and banking platforms and various financial institutions and other industries in India as well as internationally. Third is eMCA, through which we offer public key infrastructure solutions. Our clients use this to issue digital signature certificates to individuals, organizations, and devices. Key modules of eMCA include certificate lifecycle management, time stamping, certificate revocation list, online certification status protocol, tamper-proof logging and reporting, and the entire solution is robust, standards compliant, scalable, and policy-driven. eMCA is used again by government agencies as well as private sector, and use cases include setting up of various digital signature infrastructure as well as for electric vehicles and smart cities. Our enterprise solutions are either cloud-based or on-premise, which support DevOps-based deployment models, allowing clients to rapidly deploy our solutions using continuous development, integration, and delivery processes through the use of tools such as Docker and Kubernetes. Our enterprise customers stood at 714 as of March 31, 2022, which comprises top IT, banks, and automotive companies, as well as several others. I am proud to say that we today have a diverse client base with high customer retention. Now, I would like to hand over the call to our CFO, Mr. Sajid Lewis, to discuss the financial performance in detail.
Thank you, Kaushik. A very good afternoon to all the attendees. I would present the recent financial performance of the company. In FY22, the company registered a revenue of rupees 1,826 million, an increase of 38.8% on year-on-year basis from rupees 1,316 million in FY2021. Revenue growth was supported by growth in both business verticals with new customer acquisitions, international market expansion, and incremental cross sales. If you look at the segment results, in FY22, enterprise solution contributed 53% to the total revenue, while share of trust services stood at 47%. Both business verticals complement and augment each other and are strong pillars for the company's overall growth. In terms of the geographical distribution of our business, revenue from India stood at rupees 1,477 million, constituting 81% of our total revenue, with remaining 19% was from outside India. EBITDA for the year stood at 688 million, a growth of 68.7% on year-on-year basis, and margins improving significantly to 37.4% as compared to 30.8% in FY 2021. EBITDA growth and margin improvements was driven by increased revenues and improved operating leverage and efficiency in the business. Net profit for the year was rupees 411 million, a growth of 62.2% on year-on-year basis, with margins at 22.4% as compared to 19.2% in FY21. Due to the health pandemic, though there was increased adoption of digitalization, but at the same time, the cost control measures adopted by companies have resulted in slower than expected growth, a situation which we believe will improve going forward. Company has generated cash from operations of rupees 395 million in FY22, which constituted 96.1% of net profit, a result of a profitable and cash generating business model built over the years. We continue to generate incremental wealth for our shareholders, and in FY22, return on equity of 30.4 and return on capital employed of 34.1 was at a 4-year high. In light of the company's recent performance, Board of Directors have recommended a dividend of rupees 1.25 per share, a payout of 21% in EPS. For the initial public offering made by the company in May 2022, rupees 1,522 million is the net proceeds received from the fresh issue. This amount is outlined for utilization towards business expansion, IT infrastructural development, new product development, working capital requirement, and repayment of our borrowings. Kindly note that the company has become net debt-free as on 7th of June 2022. Thank you very much, and now we will be happy to answer any question you have on company's recent performance or business model.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to participants, if you would like to ask a question, you may press star and 1 on your telephone keypad. A reminder to all participants, if you would like to ask a question, then please press star and 1 on your telephone keypad. Our first question is from the line of Himani Shah from Alchemy Capital. Please go ahead.
Hello, sir. Congratulations on a good set of numbers. I just wanted to understand on the pricing front, there's so much talk about all that is going on geopolitically and slowing growth and all of that. Do you see any impact on pricing on your products because of this? And what is the what kind of guidance would you give on pricing for each of the certificate? And currently, what is the pricing that is applicable for every certificate that you issue on an annual basis?
If you see the pricing, there are 2 segments. One is the digital trust segment and the other is the enterprise segment. In the enterprise segment, there is no standard pricing. It all depends on the size of the organization, the complexity of the organization, and then how many number of users are going to use, in how many countries they are going to use. So it depends on so many parameters. And in those, currently the pricing is good only and it is favorable, so we do not see any pricing pressure on the enterprise segment. So on the digital signature segment, there could be some pricing pressure, but already this was also indicated earlier in our investor meetings before the IPO that we generally command a pricing premium of around 20%. So with that, currently whatever price we are selling, we are able to sell at that price, and the volumes are consistently maintained, as you might have seen from one of the slides. Even in spite of our current pricing, the volume has only improved over the last year, both in the retail segment and also in the channel segment. So that way we do not see any pricing pressure, and the world over the inflation is going. With the inflation, I think the price should be more better than coming down. That's what I personally feel.
Okay. Got it. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star and one on your telephone keypad. Our next question is from the line of Sahil Desai from Honorable. Please go ahead.
Yeah, hi, Mr. Srinivasan and team. Congratulations on a good set of numbers for the financial year 22. Just a couple of questions. One is, can you give us a breakup of the digital trust revenues between your direct retail and channel distribution?
Direct retail and channel breakup is there?
Yes.
Yeah.
So our revenue breakup from the trust services comes to about 845.6 million, and which is divided among channel and retail. Retail constitutes about 25 to 30% of our total trust service revenue. And enterprise solution, we have roughly 981 million of our total sales.
Almost you can say 30% is retail sales. And retail continue to increase. That's why if you see between the prospectus and the number of retail customer, what is put in the presentation, it has increased only.
Right. And would that, can you help us understand in terms of margins, your direct retail, which we see that number has grown in terms of number of retail customers, but from a revenue standpoint, what would be the differential between the margins for eMudhra in the direct retail versus the channel?
As earlier we had explained in several investor meets, in the channel we may realize the average of around 300, but in retail we realize around 1500 per signature, per digital signature.
Got it. And how would that translate into margin in terms of how much basis points would that be higher?
In the issuing the digital signature, there is no direct material cost or no direct cost. No, once the data center is set up, the same way the signature is issued for channel and signature is issued for retail also. In the retail, what some selling cost will be there. So that way the margin will, and another thing is also in both we are not transfer pricing. When we say I am selling at 300 to the channel, the 300 only is taken as a revenue. It is not 1500 is taken as a revenue and 1200 is put as a commission cost. If that way it is put, then the margin will be very low on the channel. But because the revenue itself is taken at 300, so almost the entire thing becomes the margin because the cost of additional issuance is very low. And the same thing in retail, 1500 is taken as a sale. The direct selling cost will be very, very less because it is only some sales people who are employed for doing the direct retail sale. And our Google advertisement is also very, very low because our Google ranking is very high. So it is not like other e-commerce products. So that way the margin on both will be, if here on a 300, your margin will be some 200 and almost 85-90% will be margin. And there also it will be around same margin will be there.
Got it. And on the enterprise side, based on the order book that you are looking at today, as well as your conversations with enterprise clients in terms of the deal pipeline, can you give us some sense of the visibility for this year, and how is it look in terms of growth?
No, the Sullivan report and various report has projected almost for the enterprise side in India around 30% growth, and also globally they have projected from almost $11 billion to $26 billion. And because of several of our uniqueness, we also feel that our growth, and we are striving towards working toward that growth, and the growth will be. And we are seeing a very stable and growing order book position and the growing pipeline position also. So that way we feel it will be good for the current year.
Understood. Thank you. I'll get back in with you.
Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star and on your telephone keypad. Our next question is from the line of Saurabh Thadani from IIFL. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on a good set of numbers. Just had another question on the pipeline. Could you throw some light on how our pipeline is shaping up versus, say, last year, particularly in the enterprise solution segment?
So almost if you see compared to April 1 of last year and April 1 of this year, the pipeline has almost little more than doubled. And the same situation 2 years back, if you see, it would have almost tripled kind of thing. That is the opening pipeline where we have got the orders which is yet to be converted. And similarly, if you take the other pipeline where it is a sales pipeline not converted to orders, so that's also almost become more than 1.5 times compared to last April to this April. So that way there is a robust growth in both pipeline and also order book position.
Got it. Thanks. And just a follow-up on that, what would be the average duration of the current order pipeline in terms of execution? Like how long would the current pipeline be in terms of execution?
Generally, most of the customers, it takes 3 to 4 months. But some of the bigger orders, government orders and all may take up to 6 months.
Got it. Thank you. That's all from my side.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. Our next question is from the line of Kunal Shah from Honorable Capital. Please go ahead.
Hello, Mr. Srinivasan. Congratulations on the good set of numbers. I wanted to understand the traction on the new products the company is experiencing, for example, SSL, TLS certificates and e-sign. So how is the demand and what are the revenues from these offerings?
No, now those products have started in the Indian market and the starting is very good. So we have seen some 2 or 3 major orders which has materialized into revenue. And in the foreign market, because we have to perfect the verification guideline and verification methodology for all the countries, so which is a little complex matter. For India, we have perfected, so that's why we launched in India. In the next quarter, we want to perfect another 5-6 countries and launch in those countries. So once we launch gradually, so the revenue, this additional revenue stream will develop. But within the last 3 months, the Indian revenue stream has started working.
Okay, got it. And I had one more question on the repeat rate. So can you tell me for the retail segment in the digital trust service portion of our business, what would be the repeat rates there?
Okay. I didn't get the question.
Repeat customers.
Repeat customers for the retail business of the DSCs. What would be the repeat rates for those, for that segment in particular?
We are not separately measuring, but I am sure it will also be more than 90%, 95%. What is the, because on the overall itself, it is more than 90% from the digital trust services. Retail also should be like that. But we are not separately measuring this. Yeah.
Okay, got it. Okay. Thank you.
Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. Our next question is from the line of Rishi Jhunjhunwala from IIFL. Please go ahead.
Yeah, thanks for the opportunity. Just one question on our margins, right? So our EBITDA margins have expanded by almost close to 700 basis points in fiscal 22 versus 21, and a large part of that seems to be coming from employee benefit expense, but there are other operating expenses which have come down as well. Firstly, just wanted to understand, how much of this expansion can we attribute to the change in the business mix where, enterprise solutions is a bigger proportion and retail among trust services is a bigger proportion. Would you be able to quantify to some extent how much the segmental margins could roughly look like? And secondly, what do you envisage in terms of employee expenses going forward, given that you may have plans to potentially expand in international markets on the enterprise side? And do we expect 37% to be a bit more sustainable level, or it will start going down given the investments?
Yeah, first I will cover the segments what you have asked. One is the digital trust segment and the other is the enterprise segment. So almost if you see the digital trust segment also, we get almost 88% kind of gross margin on the only trust certificate issuance side. But if you take the token, which is the hardware, there the margin may be very low, maybe 5%, 4% kind of thing. But that's why consciously we are not maximizing on the token. Very little token is issued. But then coming to the enterprise side also, on the software, if you see, per se, we get 85 to 90% gross margin, and only in the hardware maybe 15 to 20% gross margin, which is there. But if you see the overall hardware itself may be around 20% or less than 20% of the overall sales. So that way, both on the software side, the margins are so shift from one segment to another segment may not necessarily increase the gross margin, but that's one side. But the other side is when the volume scales up, because our business is not a proportionate model, so instead of supplying M-Signer to some 20 places, we supply to 35, 40 places. Corresponding number of employees will not add up. And again, because like Kaushik said, the products are all perfected in DevOps, Kubernetes and various things, the implementation time frame, implementation methodology, everything is simple. So that's where last year, if you see when the revenue has gone up by 38%, the employee cost might have gone up by 15% or 16%, somewhere like that. And the other cost, because of the travel going to respective geography, it is little bit going more. But the employee cost-wise, it is not a proportionately increasing cost. So that's where we feel when the volume further and further goes, definitely the current kind of margin is maintainable, definitely. If not, probably it can improve also.
Okay, and then the next question is a bit on the balance sheet side. So it looks like that even, compared to FY20, assuming that 21 was a normal year, our working capital intensity seems to have gone up substantially with receivable and unbilled days going higher. So just wanted to understand any particular reason for that to happen this year, and how do we think about it going forward?
Yeah, one is the receivable and the other is unbilled. So both I will answer separately. So if you take the receivable, in September, receivable almost went up to 55, 57 crore. From there, if you see December, little bit of reduction, and again, if you see March, it was around 43, 44 crore on a combined basis. So actually it has come down. Why it went up in the initial phase in September is 2-3 large defense projects which are there, where there was because of the milestone and the payment things were very after you achieve the milestone and invoice, there was some 30% payment in 1 month, 60% payment in another 3 months, then another 10% payment after 6 months. That kind of payment methodology was there. So that's where gradually it is coming down. Now, so this is on the receivable side. So receivable side, though initially it has increased to 50, 56 crore, in March it has come down. Out of that also, quite a bit of, if you see 43 crore, on 43 crore, almost some 22, 23 crore is mainly from the government kind of receivable, which subsequently also has been received. So this is one side. Coming to unbilled is a proportionate of the order book question. So when you get the order, the execution of the order takes, as I said, maybe 3 to 6 months time. So during the execution of the order, whatever progress has been achieved, that progress is what is booked in the unbilled revenue. So naturally, when the order book improves from some level to some level, almost to double the level, the unbilled revenue also will increase to double the level. So that's where if you see, almost what has happened is unbilled has increased from in the beginning of the year some 12 crore or 13 crore into some 20 to 23 crore at the end of the year. So it is almost proportionate to the pending order book position which is yet to be executed. So there nothing is alarming because it is not disproportionate to the order book position. So this is the difference between the receivable and the order book, receivable and the unbilled.
Understood, sir. And just one last question. So, you've talked about order book. So, standing today, can you give us some sense in terms of, say, how much of, revenue visibility you have for FY23 on your enterprise solution business, given where the order book is? And what kind of potential risk could there be, if macro worsens, especially in Americas and Europe, given your plans to continue to expand in those regions? Have you spoken to customers to understand whether some part of these product implementations are potentially discretionary and could be delayed?
Revenue visibility side, we do not want to give any guidance. So we will work towards a good number, and I have told these leading indicators are good, so we'll work towards it. So that's what we want to say. We don't want to give any specific guidance on the revenue visibility. Then coming to the macro picture and all that, so generally these macro pictures are applicable to anybody who may be commanding some 10%, 20% of the market. We are niche strategic player who are not still into that commanding 20% market share or 50%, except in India, where the digital signature and certifying authority market we command 37% market share. So it's more a tactical entry with the customer with the help of various market guides and other things, and with the help of our salespeople aggression. So from that perspective, I have not seen any doubt expressed by any of the customers or anything, and doubt expressed by even our own sales team on we will not be able to penetrate or anything like that. So that way, that also looks quite positive.
All right. Thank you, sir, and all the best.
Thank you.
Thank you. Our next question is from the line of Himani Shah from Alchemy Capital. Please go ahead.
So I just had two more questions. One is, in the presentation you mentioned about new product launches in the enterprise solutions using a blockchain and cryptography. Would it be possible to throw some light about, probably like as an example of what is the solution and, what is it that the new product launch are all about? That's one. And my second question is and also can you throw some light on the competitive landscape? We have a 38% market share, and if you can just, throw some light on the domestic as well as international competition in digital certificates, digital trust services, and, the enterprise solutions that we offer.
Yeah, on the competitive landscape, I will answer. Then about the blockchain and the other product, Kaushik will answer from a technology perspective. So on a competitive landscape, while we command 38% market share, our next player commands almost 18-19%. And we have been consistently commanding this kind of a market share for the last 2 to 3 years. And the other 2-3 players are small players who are commanding 10 to 15% market share. This is on the digital trust services in India. Then when we come to the enterprise solution, there is almost no local competition. Everywhere we are the only Indian solution provider providing the digital signature-based authentication, providing the paperless workflow, including the digital signatures in India. So that way there is no local competition. But the foreign competition, there are some deficiencies for them to enter into India because they are not allowed to issue the e-sign or issue the digital signature. So though they may have solution, they have to come to a signature provider to help them to give the signature side. So that way this one-stop shop approach has really helped, and that's where we do not face much competition. We are able to penetrate the Indian market. And in the global market also, because of our flexibility, and we go more into the regulated industry and banking, where instead of a cloud-based service, they want an on-premise based service or a private cloud-based service, which predominant American competitors are not offering. So that is another niche area we are able to enter. So the main competition for paperless workflow is US competition. Then again, for the MCA product, also two European companies and then one US company. So against them, we have been able to do several wins because we are also featured in Gartner report, IDC reports, and many reports as a full service provider, and we have got several reference customers globally as of now. So that way we are able to take care of the competition. Then coming to the blockchain, I would request Kaushik to address this. In which area of blockchain we are there and what we are doing.
Yeah. So broadly on blockchain, it is of course a decentralized platform, and today there are several concerns around identity and how do you prove the identity and authenticity. So that is the bridge that we are trying to sort of fill, is through a certification authority like our company, where we are able to use these digital signature certificates. If those are used to sign various transactions on blockchain, particularly smart contracts, then they will be upheld in the court of law and sort of be legally valid, right? So that's the broader use case. More specifically, blockchain platforms are today being used for various decentralized finance transactions, which is sort of the equivalent of something like a peer-to-peer lending use case. In such transactions, again, digital signature certificates that are provided by certifying authorities, if they are used, they will be legally valid. So we're already working with several blockchain platforms to essentially allow the use of these legally valid digital signature certificates, which can then be used to sign various smart contracts so that they can become legally valid.
And Kaushik, while you are here, if I can just add one more question, just to understand on the international side, what is it that we are, I think sir mentioned about, offering services that are not really offered in the US. So what are those services that you are offering, and what you think you have a right to win in the international market?
No, not the service not offered in the US. The major US players are offering in cloud model, whereas we are offering on the on-premise and private cloud model. Maybe that Kaushik can amplify.
Yeah. So just to again elaborate a little on that, today if you see some of the competitive platforms, they are completely on public cloud. They are designed to be more general purpose contracting platforms and typically do not allow identity-backed digital signatures to be used. And those are the three things that we provide. In the context of regulated industries, even in the developed markets like banking, financial services, etc., there are these requirements for sort of maintaining data residency, proving the identity and authenticity. So those are again capabilities that we've built in the context of, for instance, when we use EM Signer in the context of banking industry. And that is where, we feel we will have some unique positioning when we even go to these developed markets.
Understood. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. Our next question is from the line of Sahil Desai from Honorable. Please go ahead.
Yeah, hi. Thanks for the follow-up. Just wanted to get a sense on what our plans are for the US market in terms of what investments we're making, the team size that we are hiring there. If you can just help us understand, and then from a revenue contribution point of view in the medium term, what kind of target are you internally sort of chasing from the US geography?
Yeah, mainly in the US, two strategies will be done. One is the recruitment of people. Already, as of now, we have only one person, so we may have to increase the team to 7-8 people. And then we have to enroll a number of partners. So the partners who are in the similar industry, so who are marketing the product, because a lot of the partners do not have any exclusivity. So for them, we can offer a better term and then better various things so that we can get those partners. Anyway, because they are selling similar products, this is the same strategy we followed in Middle East also. So then we could get a lot of business through them. So both the strategy will be adopted, and the other thing is the how the niche market reports of Gartner and other important analyst things to figure in. Already If you see our M-Signer product, it is already there as a global full service provider. Similarly, banking specific product also, if we bring into that, then penetration into a lot of mid-tier banks can happen. May not be large bank, but at least mid-tier banks will be possible. So these are all the 4 5 ideas. Then another thing is even if you see the MCA product, there are a lot of private certifying authority in USA or even several banks having private the ability to do private certification for their own transaction. So those kind of market again we can try to penetrate because of our product superiority and also maybe better cost in terms of the US local competition. So all this will be possible. So this is what we are protecting. And then if you see how much we have done in the US, the last year itself being first year, we could do about, I think, 6 crore or 7 crore in the US. So that way we can definitely, we feel that just with one person we were able to do so much, we should be able to do better in the coming years.
Got it. That's all from my side. Thanks.
Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you. And thank you everyone for joining our first earnings call. We are excited to start our journey as a listed company and look forward to having more such interactions going forward. So if any questions remain unanswered or you have any further questions, please feel free to connect with our investor relation team. Thank you. Thank you very much.
Thank you. On behalf of eMudhra Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.